Welcome to the daily update, where I'll go over the action in the market for Thursday, December 14th, and then we'll see how things look for Friday, December 15th. We had another update. There was some positive overflow from the session that we saw on Wednesday, and folks are starting to fear missing out. We're also in a positive seasonal time. And so you have all this working together, and folks are just totally convinced the market's going to go up. However, we still continue to be extremely overextended to the upside. There are some warning signs that we need to pay attention to. We're also battling with some longer term resistance that we need to pay attention to. And when we take all those things together and we're in a real overbought condition, sometimes the market will defy what everybody thinks is going to happen. Now, this could still go on for some time. The idea that we're going to go higher and get a lot of folks into a false sense of security. Now, we could work ourselves sideways for a while and kind of work off some of this overbought condition and have this continue for a while. But at the same time, we want to be respectful of the fact that folks at some point are going to want to take some profits, and this is going to push prices lower. The best that we can hope for is maybe some kind of a sideways move. But we didn't really see much reaction to that in Thursday's session. We saw a bit of a doji sign with our candle, meaning that we opened and closed at right about the same spot. But there's not a lot of weakness coming into the market, at least yet. The one thing that is a concern is we're not seeing real participation with growth, and we're not seeing participation with the transports. Those are two other areas that we really want to see doing well. We're seeing some real improvement with the small caps and the mid caps. Now, we're also potentially shifting into another phase of the stock market. These things, it goes through cycles, and we've been in this cycle for a long time. And instead of being in a rising interest rate environment, we could be starting to pivot over into a new environment where some of the other areas start to look more positive. Other areas may stay about the same or actually show some weakness, and we'll try to pick that out each day as it unfolds. Let's go back and talk about what happened. Right at the open, we had a gap higher open. A lot of this was left over from Wednesday's session. People that don't necessarily watch the market during the day came home and went, oh my goodness, things are looking good. It looks like the Fed's going to start cutting rates somewhere in the future. I better put in my buy orders, and that produced a gap higher open. We were positive in Europe throughout the night. The futures were positive, and so we ended up opening above R1 at 47.30. And then we chopped slightly above and below R1 for a while. So we didn't see a lot of selling into strength. We didn't see a lot of follow through buying either. As the day went on, prices then declined from R1 down to the unchanged level. Very common for that to happen. It's kind of like filling the gap. And then we just stayed right about at that level, and we closed slightly positive. So we were well off the highs. We were up 0.26% on above average volume. That's still been pretty high. We are positive with our technicals. The market is kind of going through this shift now about inflation, interest rates, wondering, are things going to change as we start heading into 2024? Of course, we'll be watching to see what kind of Fed speak comes out now that the meeting is over. You have folks that are on the committee that'll come out and they'll give interviews and do speeches and so forth. And the market will try to read some secret meaning into whatever they say. And then we're also keeping an eye on the geopolitical events, specifically what's happening in Israel. Some comments that we can make. The European Central Bank, the Bank of England, the Swiss National Bank in Hong Kong, they all left their rates unchanged. Now, they're not quite as dovish in Europe. They're not really seeing this potential of cutting rates into the future the way the Fed is, but the fact that most central banks now are at least leaving rates the same, especially the real influential banks, that is being taken as positive. We are seeing more of a broad advance. We're just wondering, is there going to be some kind of a blow off top that happens here? Is it going to happen in the month of December? Is it going to come in the early part of 2024? It may not end up happening like that. We just want to be aware of this. When everybody is getting positive in all of our signals, for the most part, there's always things to worry about, but we're firing in one direction, that's when we start to look for clues that maybe things are going to at least slow down, if not in fact change going forward. The NASDAQ 100 is still at its previous all-time high. We have not been able to break above that. However, and I didn't mention this yesterday, the Dow did set a new all-time high, and then after Thursday's session, it set another new all-time high. We have a pretty long list in the short term with our indicators looking extreme positive. Of course, the ADX, that's been there now for a couple of weeks. The shorter term advanced decline ratio, the force index, the McClellan oscillator for the S&P 500, the 20-period moving average study, and then some more of our usual suspects like the Stochc RSI, Williams percent R, the CCI 14 and 20, the stochastics, the PMO oscillator, the RSI based on 9 periods, and then the boom indicator based on 20 periods. And then we look at our intermediate term list, and it's also overbought or looking extreme positive and still quite long. We also have that ADX indicator that's well above 40, the 50-period exponential moving average, our standard deviations chart, and I didn't add this yesterday, it should have been there, the rate of change going back 50 periods. Our Rune indicator, even though it's coming down slightly, is still pretty extreme. The PMO studies, the Sean trend meter, the Chaikin money flow, the Chaikin oscillator, the balance of power, the CMB composite, the S&P 500 bullish percent index, as well as the NASDAQ 100 bullish percent index, the percent B indicator, the boom indicator based on 50 periods, the ultimate oscillator, the new highs and new lows study for the S&P based on 10 periods, and our advanced decline ratio based on 19 periods for the S&P. It's quite an undertaking just to read that list. In the long term, we still have our 150 period and 200 period moving average studies that are starting to get extreme. We're wondering if there is a pivot now with the Fed. They are, for right now, keeping rates higher for longer. There's no real talk yet other than speculation and just the idea that they're discussing rate cuts going forward. Earlier in the week, it looked like they might start cutting in March. Then when some stronger economic reports came out, that went off the table. Now it's coming back on the table. So it's looking, at least right now, like they could be done raising rates. And then at some point going forward, possibly in March, they will start to cut rates. Of course, we want to keep an eye on Israel, oil, and earnings as they are released. The dollar, it closed down in Thursday session, but then it's seeing a bit of a rebound so far in Friday's session. So it's actually up right now, but interest rates ended up being down. Those are really dropping, and that's giving a lot of support to stocks. But we still have the inverted yield curves for the 10 to the 2-year and the 10 to the 3-month. Sentiment is still positive. When we get to that 75 level, that's when we're extreme positive, and we're still not quite there yet. We're at 71, where we ticked up from 69. Our trend is positive, but looking rather extreme in the short and intermediate term. Our bias is positive and our momentum is positive. And if you're new to the videos, bias is usually one day, where momentum is the last 2, 3, 4, 5 days kind of taken together. The reports that came out, and I don't have all of the charts, just for the main reports that came out. Weekly jobless claims came in at 202,000, less than the 222,000 they had expected, and down from the 221,000 we saw last week. Continuing claims were up just slightly to 1.876 million, where it had been at 1.856 million. Retail sales, this came in hotter than expected. Now, the market could have freaked out on this, going, oh my gosh, retail sales. We expected them to be down 0.1%. They were up 0.3%. Last time they were down 0.2%. But at least in Thursday's session, good news was taken somewhat as good news, just to suggest that the market's not, or the economy's not falling apart. When you take out autos, we were up more than expected there too, up 0.2%. They expected it to be unchanged. Last time it was unchanged. And then I'm just going to read through these. The export prices were down 0.9%, the same as last time. When you take out agricultural products, down 1%, the same as last time. Import prices were down 0.4%. Last time they were down 0.6%. When you take out oil, they were up 0.2%, or last time they were down 0.2%. Business inventories were down 0.1%. They had expected them to be up 0.1%. Last time they were up 0.2%. Now we're finally dropping under this 4.02% level that RenMac has done some research on. When we're above that level, that for the 10-year yield, that can really bite into corporate profits. Well, now we're dropping down below that. Is that going to end up helping corporate profits? If that's true, then that could be quite positive going forward for the market. Here are some charts where we look at the core retail sales year over year, where they did tick up and they're above zero. So retail sales are a huge part of the U.S. economy, and the fact that they're holding up is fairly positive. When we look at it month over month, we declined the previous month. Now we saw an uptick in the latest reading. Weekly jobless claims did really decline. We follow mainly the blue line with the moving average based on 4 weeks, where it is also declining. But we're seeing a bit of a tick up and still a continuation when we look at the continuing claims. These are folks that are beyond the 1 week of unemployment. And we want to keep an eye on this, because if this really starts to go up, that could show some weakness in the employment situation. Then we take all of this together, where we have the initial claims, the continuing claims, and then the unemployment rate all plotted on the same chart. Here's our daily chart here, the intraday version, where we gapped higher up to R1. We pretty much set the high right after the open. We chopped just a little bit underneath R1. We could not break out to the upside, so some selling came in, took us back down to the unchanged level. We actually went negative for a little while, but then we're able to bounce back up and close slightly positive on the session. Here's the intraday chart, where we were pretty strong in the initial overnight session. That carried over into the pre-market session. And then we see the choppiness that happened in Thursday's session, and we're up again a little bit in the initial overnight session. We are seeing where growth and value are performing about the same. They were both up, but the red line is still on top of the blue line, even though they're on different scales. This is another area that might be starting to shift now as the economy is starting to shift. We've been concerned about this. When we look at the growth to value ratio for the S&P, we had another up day, and this ratio continues to go down, even though it showed some improvement going into the close. The end of day charts, we were actually down with growth, where value was up. With the mid caps, growth was up, but it underperformed. And with the small caps, growth was also up, but underperformed value. Then we look at the ratio here on the end of day chart, and showing that this continues to go down as the S&P index itself has been going up. That's a bit of a concern. Our trend is still extreme. We're just continuing to go up with the ADX. We're above the moving average, and not really showing any signs of rolling over. The green line itself is also above 40 now, as it's just really promoting this irrational exuberance type of movement in the market. And the short term is even more extreme, where we continue to go up with the ADX. The green line is above 40 and advancing. Volume is picking up, so that's rather encouraging, as a lot of folks are participating. When we look at sentiment, I moved the circle over a little bit. Maybe we're coming into this period now where the VIX tends to drop. It's already very low. It's kind of hard to imagine that it could drop even lower than it already has. Even on the average basis here, we're showing that we're at the 20 level and below, where we're getting down even well below that with the current readings of the VIX. The Ulcer Index still is not showing that there's any fear in the market. Here is the VIX, where we're coming down to this 12 level with the line chart, even though we bounced up a little bit, and we continue to decline overall with the bar chart. This may not have been erroneous data. This really spiked up in yesterday's session, but we're showing that volatility of the VIX, or the VIX of the VIX, is continuing to go sideways on the bar chart, and it declines slightly on the line chart. This is one of those charts that we have to dust off every now and then. This is the skew index, where the VIX is calculated around at the money options. The skew index looks at out of the money options, and we're coming up into that red area. Doesn't necessarily mean we've spiked yet. We could still go up from here. Now, some people see this and they go, oh yeah, the market's going to tank. Well, if you look at other times when it spiked and then came down, sometimes, yeah, that did mark a top. Other times it marked a bottom. Other times it just ended up marking a continuation. We need other charts to look at to give us some context for what's actually happening here. We just want to be aware of this. We are continuing to decrease with this fear gauge, and we're also decreasing with the other fear gauge that we follow. We are seeing some improvement. We can almost shift more to a positive stance now when we look at the risk on to risk off ratio. This is starting to go up, and we're seeing some more consistent movement with this ratio. We did get the latest reading of the American Association of Individual Investors. They're just starting to get extreme positive. Now, remember, this is a week ago, so this is probably going to go up in the reading that we're going to get a week from now. And we're starting to get a little extreme when we look at sentiment with this gauge. Our advanced decline line studies, we're still looking quite positive based on price and volume. We're seeing another breakout of new highs, but our 5 period continues to go sideways where the 10 period is going up. We are still extreme with the advanced decline ratio based on 19 periods. That's the blue line, where the red line is still positive and not extreme yet. Accumulation distribution still is looking positive, and we're getting kind of high with our chicken money flow, but we continue to be positive. We saw a real nice advance with the cumulative advanced decline line for the NYSE. With our regular NYSE advanced decline line, we're also showing some improvement, but we have not come back to this previous high, at least yet. Our other study of the NYSE advanced decline line is also showing some improvement. And as I pointed out yesterday, now we're seeing more of a confirmation. We were seeing a breakout with the common stock on the NYSE based on volume. It hadn't broken out yet based on price. Now they're both starting to break out and confirm each other. When we look at our advanced decline line studies, we're seeing improvements across the board with all the different indexes that we follow. Here's the daily chart where we kind of closed and opened right about at the same point, but it was still an up day. We are above this previous resistance that had been giving us some difficulties now. We are above this pivot point. So if we see a little bit of a pullback, we'll be waiting to see if this offers some kind of support. On the bottom, you can see where volume really spiked up well above average. We're getting extreme with our 20, 50, and even really close with our 200 period moving average study. We're extreme with the boom indicator. This is how far away are we from moving averages, and we're getting kind of far away from the 20 and the 50, where we're showing more improvement with the 200. And then our usual suspect charts. This is the Stochk RSI, which is extreme positive. The Williams percent R, the CCI 14, and the CCI 20. We're still looking just about extreme with the force index. We're not quite at the Keltner band yet, but we are showing some improvement here. But when we look at our stochastics, even though we're rolling down, we're still extreme in the short, intermediate, and long term. And for those of you that are new, these are further subdivisions of the short-term time frame. We're well above the +3 Keltner band when we look at our standard deviations chart, showing that we've gone up pretty far, pretty fast. Some intermediate term charts. We're coming down a little bit with the balance of power, but we're still extreme positive. The go, no-go system is still looking positive. This is more of a trend-based system, and we're looking good with the highest high value as we're up along the blue line, and that's continuing to go up. The TTM squeeze in more intermediate term is starting to turn back up, and we have a lighter shade of blue. Then we're also getting extreme positive. We've been there for a few days now with the CMB composite index. We're turning back up with the ease of movement, which is turning more positive. We're turning up a little bit and getting rather extreme with the Arun. It had come down a little bit. It ticked up then again in Thursday's session. We're getting extreme with the McClellan oscillator for the S&P 500. So when we look at our summation index, we are breaking out above these previous levels based on price as well as volume. And when we look at the NYSE summation index, we are advancing based on price and volume. So that's a broader measure where the S&P is more specific. The Swenlin trading oscillator based on price and volume continues to advance. We're also going back up with the PMO, but we're getting extreme. We're also getting extreme based on price. We haven't become extreme based on volume, but we're still positive across the board here. We came down just a little bit with the PMOs that are rising. We're just barely reading an extreme positive reading. We're ticking down just a little bit with the buy signals, but we're still extreme with the PMOs that are above zero. We continue to be positive on a trend basis when we look at the Elders impulse system. We're also positive with the parabolic SAR. We're turning back up and crossing above the moving average with the slope oscillator, but we're already extreme now. The MACD is also turning back more positive. So when we look at all of our oscillators, turning back up with the slope, but extreme, we're extreme with the TSI, but it's still positive. We're also turning back up with the MACD, the PMO, and the PPO. We're still positive with the tricks, but we haven't quite crossed above the moving average yet with the KST. So a little bit of a mixed picture, but across the board, it's showing some improvement. We're above all of the moving averages in our moving average tree. And we're also starting to get extreme with the bullish percent index. This is kind of a big one. So this is one that I'm going to be watching to see when we finally top out with this and then start to come back down. Now, it's not going to be an official signal until it drops below 70. That may take some time to do, and we could chop around. But there's been other times when we come up, hit a top, and then immediately turn and go in the other direction. With the NYSE bullish percent index, we're still looking positive. We're above 50 and advancing. We're getting really extreme with the NASDAQ 100 bullish percent index. We haven't seen a reading this high in the length of this chart, which goes back about a year. The Sean trend meter is still extreme positive, or we're climbing up to the blue line. The Chaikin oscillator is still extreme positive. The money flow continues to be positive, above 50 and not extreme now. The ultimate oscillator is trying to turn back down, but hasn't quite crossed below the 70 level. The vortex has the green line going up. That's positive. And we've spent 3 days now, or should I say 2 days? 2 days now, with the percent B indicator giving us an extreme positive reading. It came down just a little bit, but we're outside of the upper Bollinger Band. We tend to not stay there very long. We're going to need the Bollinger Band to really get into gear and go higher, or we're going to see price come down to get back inside of the Bollinger Bands. When we look at the RSI 14 and 9, we are still extreme positive. On balance volume continues to be positive. The rate of change going back 50 periods, it declined a little bit, but we're still extreme. We are coming back to previous highs when we look at the 200-day moving average study for stocks in the S&P. We're also coming back up to previous levels when we look at the 50-period moving average study. And I don't have any fib lines or fib charts now to show you because we're still in no man's land. So we look at the trend line study showing that we're just breaking out above these previous highs now, and things are showing a lot of improvement just when you look at the chart. On a trending basis, we are still positive. The Heiken Ashi is positive, the Kegi chart is positive, the Renko chart is positive, and the 3-line break is positive. Some longer term charts, we're starting to break above this upper extreme reading with the 150 period moving average study, as well as the 200-day moving average study. And we have been able to get back above this previous pivot point now. This was the resistance level that we hit in July, and then we started to come back down. After that, we're now breaking back above that level. That's longer term positive. The Zohorchak method has not changed. It's still neutral. We still lean to positive because we had been down at the -6. Now we've come back up to 0. And we're above this longer-term trend line. When we look at the weekly chart of the S&P 500, we're wondering, can we stay above that? We were able to break above this before, only to turn around and come back down. We're wondering, are we going to be able to keep going above that this time? And we're also coming right up to the trend line with our NASDAQ 100 weekly chart going back to 2009. So this is longer term resistance. Looking at some indexes, we are seeing the equal weight really start to improve, and it's starting to outperform the S&P 500 weighted index. That's just showing more broad participation. The equal weight ratio compared to the S&P 500 is going down. Doesn't mean that things are falling apart. It just means that the big mega caps aren't doing as well now as some of the broader market stocks. We are going up and setting new all-time highs with the Dow, but we haven't even been able to come back to this previous high with the transports. That's a little bit of a concern. We did decline a bit with utilities since interest rates were down. And the transports continue to underperform the Dow, and that's a bit of a concern. But the Dow is just breaking out above this R1 level and showing a really solid chart pattern now. And we continue to be positive with the Elder's Impulse system when looking at the diamonds. The NASDAQ is coming right up to this R1 level. It has not been able to close above that, even though we got above it during the session. We're back above these previous highs, but now we're going back to these other highs, wondering, are we going to be able to stay above these points? The NASDAQ 100, we're coming right up to this R1 level. Is that going to provide overhead resistance? But we're still positive when we look at the trend for the QQQs. We're turning back positive on a momentum basis with the PPO for the NASDAQ 100. And here's a weekly chart showing how we're coming right back to this previous all-time high. We've not been able to break above that yet. So that's one thing to keep an eye on in Friday's session and even going forward. The small caps had another good day, up almost 3%. We broke above R1. Now we broke above R2, showing a lot of improvement. We are still working off of a longer term downtrend, but we're really starting to turn back up as well. And we're breaking above this other resistance level. We were having a hard time getting above this previous resistance level, and we just shot above this. But we've seen breakouts with small caps before, and then they really shoot up, and then they spend the next 2 or 3 days going sideways, if not giving back a lot of their gains. So be aware of that. But things are turning positive, and you have a lot of folks really wondering if the January effect is starting to happen now, which tends to favor small cap stocks. We are positive when we look at the Elders Impulse system for the small caps. The mid caps are also breaking out well above the R2 level, still in a longer term downtrend, but showing some improvement. And we're also positive when we look at the Elders Impulse system for the mid caps. Financial sector was up another percent now and is turning back more positive. The bank ETF is also showing a lot of improvement. We did see a recent golden cross here, so this is looking a little bit more positive. And we're continuing to go up with the micro caps. We're breaking out above 112 right now. The FANG index is continuing to go up. That's showing some strength, not massive strength, but it is going higher. And we're back to the point now where we're setting new all-time highs with the FANG index. The small caps, and I haven't shown this, and I'll also show this again in the intermarket analysis video over the weekend, we are bouncing back up. We're still underperforming in the longer term, but we're seeing some real improvement here. And that would really help the market if the small caps could kick into gear and sustain an upward trend. We look at discretionary versus staples, where we are seeing discretionary starting to break out when we look at the equal weight ETFs. That's positive. The dollar, it did decline, but then it's been ticking up just a little bit in the new day's session. When we keep an eye on interest rates, we're really declining with the 10-year yield, which means we're going up with the 10-year based on price. And we're still out of whack here when we take the 1-month yield and subtract the 3-month yield. And this has gone on now for a few days. We're at 0.11 currently now, and I'm not really sure why this is happening. And then an update of some of our other charts. The 10-day average of the S&P 500 highs minus the lows. We've been up in this area for about a week now. We're also looking extreme with the 19-day exponential moving average of the advanced decline ratio for the S&P based on price as well as volume. We're looking better on a broad market range. We continue to be above zero with our 5-period moving average study of the new highs and new lows when we look at the broad market. And our 50-period new highs and new lows study continues to advance. That's longer term positive, but we're getting extreme with our indicator. Now it could go higher than where it's at now, but this is the area where we want to be aware of this. We are continuing to drop at the 2-year yield, which has been giving some support to the S&P. And when we look at the staples to S&P 500 ratio, this is starting to fall again, which is also giving some support to the S&P 500. So what's our outlook then for Friday? It will be quadruple witching. You're going to have all kinds of options expiring. And so there could be a lot of volume. It could also be its own crazy kind of day. Earnings as they are released, and then keeping an eye on the different geopolitical events. We are still overbought. We are still positive. When we look at our technicals, we are breaking out of a range, but we have to wonder, are we going up really quickly here? Are things getting out of hand as folks are fearing being left behind and just throwing money into the market? We will get the Empire State Manufacturing, industrial production, and capacity utilization. To me, that's kind of the biggest one coming out on Friday. And we'll get the S&P Global Manufacturing as well as Services PMIs that will be coming out. And then we want to keep an eye on all the different geopolitical events. So I'll be coming out with a new calendar when I do the video for Monday's session. Looking at seasonality, we tend to be positive on December 15th. We're also in options expiration, where we're up 69% of the time. We are going to be dealing with quadruple witching. But when we look at the Dow, S&P, and NASDAQ for December 15th, we are positive across the board. We're also wondering, is the January effect finally starting to kick into gear here, where the small caps tend to outperform the large caps? We don't really see any major positive seasonality here. When we look at the 15th, this will be the 11th trading day of the month and options expiration day, so that can make things kind of crazy as well. Then with the Carson research, they have us bottoming out here in about the 15th and then going forward into the end of the year. Based on their research, they tend to see positive seasonality. Thursday ends up being a positive day, which it was. Now that we're going into Friday, it tends to be a more positive day, the second most positive day of the week in 2023. And now we're wondering, during a pre-election year, are we coming into the positive seasonal time for the S&P? Also positive seasonality based on this chart, this other chart, the next chart, and the Carson chart, and even the equity clock chart. We didn't really see much of a pullback here, but we're coming into this period now where we might see positive seasonality going forward. Now, it doesn't mean we're going to go straight up, and the market likes to defy conventional wisdom sometimes and really throw things at least into a little bit of doubt, but that's just not happening yet. When we look at the Stock Traders Almanac statistics, we do see positive seasonality going forward with the NASDAQ as well as the S&P. So our scenarios, we cannot go with the down one. No matter how overbought we become, it's very dangerous to try to front run this without really any evidence. Yeah, there are warning signs. Yeah, we had kind of a doji looking kind of bar, but we're not really seeing any real strong evidence yet that we're going to start to head lower. We need to see it happening with price and then that flow through into our charts. So we're still leaning more towards the upward scenario now, even though we are overbought and even though it may end up leading to some kind of a blow off top. Now that blow off top may not even happen. That's just something to be aware of. We are concerned because our trends are very strong, both in the short and intermediate term, and they are getting extreme positive. So when we look at the warning signs, growth is really not participating, at least very much right now. And I pointed this out yesterday. I wasn't able to update the equity put call charts. They weren't updated yet at the time I wanted to record this, so I don't really know what to say right there. Our momentum oscillators are improving, but we're still seeing a bit of a mixed signal there. The Copic curve is negative, and the Russell small caps and mid caps, even though they're really bouncing up now, they are still in longer term downtrends. The positive signs, our daily special K chart is positive, and I don't know what to say about the 253 period equity put call ratio. It's probably still going down, but until I actually see a chart, I'm not really sure. The risk on posture is showing more improvement. I've actually added this now to the positive slide. Our oscillators are improving, but we're still seeing a bit of a mixed picture there. The parabolic SAR and the vortex indicators continue to be positive. We're getting extreme now with the bullish percent index for the S&P 500, but we have not necessarily topped out yet. The Zohorchak method had been negative. Now it's going back to neutral. And we're just not seeing much participation when we look at the growth to value ratios these days. The financial sector has been seeing some real improvement and is more positive, and our longer-term new high, new low study is continuing to be positive as well. So our conclusion, this is the same. We're positive, but we're overbought. We are breaking out. Anytime we have an update, that's a breakout to some degree. We are setting all-time highs with the Dow, but we just want to be aware, is this some kind of a blow off top? We can say that same thing in the short, and in the intermediate term, we're getting really extreme. That is a long list of indicators to have extreme positive, but we are still positive in the long term, even though we're showing some slight overbought conditions. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.